Okay, well, we had that interest rates decision, and that was interesting, right? Well, played out as we kind of went over in yesterday's video. We saw a 50 basis point hike there in the US. So let me just check that out. Have the interest rate chart now. Okay, so yeah, rates are at 1 now, 100 basis points or 1%, whichever way you want to say it. And so, yeah, that's interesting, and, that definitely signifies a hike there. Now, I was pretty certain that it wasn't going to be raised by more than 50 basis points because at the end of the day, the Federal Reserve kind of, they exist to try and keep things as stable as possible, although they fail sometimes, obviously, but, they don't want to raise it by 75 basis points or 100 basis points because that would go against what the market has priced in. Okay, so you can see that the S&P 500, in reaction to that interest rate hike, has actually pumped when in reality that's a bearish move for the entire markets, right? Because companies now can take out, basically can just take less debt. People have less money to spend on companies, so stock valuations go down in general. Interest rates hiking is obviously not a good thing for stocks. However, seeing as it was priced in during this kind of massive downfall from 4,600 all the way down to 4,000 flat, it was priced in that there was going to be a 50 basis point hike, and so the market was prepared for that. So if we saw a 75 basis point hike or a 100 basis point hike, although that is what is required, it wouldn't have been good because then, the markets would have had to go down. And as I said, the whole point of the Federal Reserve is to try their best to keep things stable while putting in things in place to combat inflation, which is essentially what they're trying to do with interest rate hikes. But, someone says scam pump. I don't know if it's a scam pump or it's just part of the process. I wouldn't say that the pump on the S&P 500 and the recent pump on Bitcoin perfectly reflects the macro situation right now. I would just say it's a normal reaction to a short-term move that was already priced in. So you'll notice yesterday in my video, I said basically I don't really know what's going to happen in the short term because it's very, very difficult to predict something like that with interest rates, how the market's going to react. But it was priced in, it turned out, and hence we saw a little bounce because of that. Now, that doesn't mean that the market's good now and good to go. It just means that that singular decision on that specific day was priced in, and so now the market can have a bit of relief. And so ultimately, I wouldn't be too surprised if Bitcoin breaks out of its descending wedge to the upside due to that. Because if we cross-analyze and look what happened last time, right, so we had interest rates rise 25 basis point on, I think it was 14th of March, somewhere around here, right? We had basically 2 weeks of an uptrend, and Bitcoin copied that, right? On the S&P 500, 2 weeks of an uptrend, and Bitcoin copied that. Bitcoin went up for 2 weeks. It went from 37,000 to 48,000, right? And then obviously as the interest rate fears started to spike up again, we started to go back down. So again, it's very hard to predict the short term right now, purely because it's not really reliant too much on the TA. The longer term trend is what I'm trying to predict. We could realistically see, and I said this in yesterday's video as well, we could realistically see a retest of 42 to 43K again. I would just be skeptical to assume that it's going to break that region, right? I don't necessarily think it's going to do that, given the macro environment. If we're looking at where, what stands at 42K, we're looking at the 50 SMA, we're looking at Ikomoku, we're looking at Gaussian Channel, bull market support band, 75, 21 as well. We're looking at the center line of the Bollinger Bands. There's a lot of resistance above us right now. Does that mean we can't break through it? Of course we can break through it. It's just a question of, how, logically speaking, given the macro environment, does it seem like Bitcoin will break through that? I don't think it does. And that's going into the longer term charts as well. However, I have said on multiple occasions that 37K is really the critical breaker, right? If 37K is lost, there's basically no chance of any kind of bullish recovery for the rest of the year. But if we hold 37K, then technically we have a chance of being bullish, right? And that's what I've stood by the whole time. Yeah, hey guys, got a bunch of people in chat. That's great to see. I haven't done a live stream in 2 months. So, it's been a while. How high can this small recovery pump go? Look, as I said, the main target, I'm looking for a rejection, the main rejection zone, I guess you could say the first step the bulls need to make is to jump above, say, 42.5K. If they can do that, that's getting interesting. That's when you start looking at the bullish argument genuinely and seriously. But until that point, It's just kind of ranging after a bear flag breakdown, right? We've had a massive bear flag breakdown. This solid line, yellow solid line channel was the bear flag. We've broken that to the downside. Unless we can break back within that, there's no real macro progress. It's just kind of jumping around brainlessly, and people are just getting flipped back, bullish, bearish every 2 seconds, even though nothing's really changed. So again, 42.5K is the major step that needs to happen. So I'd say right now the 2 critical zones you need to be looking at, and I repeat this every video, like in the last week or so, because it's just what it is. The 2 major zones you need to be looking at right now are 37K and 42.5K, right? Whichever way Bitcoin goes will determine the next shorter term trend. If we break 37K, we're going to 33. If we break 42.5K, we'll go straight up to 45 to 40, 45.5. And then we can get to the next step. I don't want to make these, big short-term predictions, because as we've just seen by the Federal Reserve right there, the shorter term is just hard to predict right now. It really just is. Zilla's pumping mega again. Hello back from Bangkok. How you going, guys? You guys going well? I haven't looked at the charts this morning, by the way. This is the first time looking at them, so I'm just freestyling this. Probably won't go much higher. Yeah, look, it depends what the S&P 500 does. As I said, last month when we saw, or March, I should say, when we saw that interest rate hike, we pumped up literally just because the S&P 500 pumped up. However, we do still respect TA. So people say, well, Bitcoin's pumping because of the S&P 500. It's like, yeah, that's correct, but it still respects TA. It's not just going to go to 52K and come back down to $1 because of the S&P 500, right? It's still going to act within the logical bounds, right? So that's why I'm talking about 37K and 42.5K. But I'm going to look at your, or you guys post all the questions you want, and I'll look into those questions. But before we get into any questions, I want to do a quick little run over on Bitcoin, and then we can do questions throughout the rest of the live stream. I do like doing a little Bitcoin run over, so the people who don't catch for live stream can just watch Bitcoin at the start. Let me just see what's going on here. Yeah, right. 96 concurrent viewers. Yeah, it's definitely the most we've ever had there. So it's been a while. It's been 2 months. Pretty cool. All right, so moving on here. Bitcoin. So as we just said, right, all of the short-term stuff, a little bit unpredictable. Major levels you need to be watching are 37K and 42.5K, right? What we're looking at on the shorter term is a bear flag breakdown. We're also looking at a descending wedge formation, which is typically a bullish formation, which is why this structure is kind of confusing. We have not broken that descending wedge formation to the upside yet. That's worth considering. A lot of people are willing to flip back bullish at the bloody drop of an eggshell. I'm not like that, right? I'm waiting for something to happen because nothing's happened. We're still in the descending wedge formation. There's no telling as to what can happen next. We could just bloody drop down and break into the downside, right? There's no real indication of what's going to happen next year. Now, if we looked at something like the RSI, which we'll bring up right now, relative strength index, we can see we do have some bullish divergence playing out, and so that does buffer the bullish argument a little bit. We also just saw a bullish MACD cross. However, it's too early to say if that will actually play out, or maybe it just flattens out for a few red candles. Volume doesn't look too bad from what I checked yesterday, so let's see how it's looking today. All right, yeah, pretty good green volume on this recent kind of upwards rally, which is good to see. So there is a bit of reaction there from the bulls. It does look as though, according to the TA here, that the bullish argument might have some sustenance in the short term. But again, we want to be seeing a daily close over this wedge in order to kind of, consolidate that prediction. Now, why am I so interested in 47K? Well, you guys would know this already, right? If you've watched some of my videos before, but we're just going to look into it again. 47K is interesting to me let me go to the Bitstamp chart, for the monthly chart specifically. And we'll jump onto the logarithmic scale here, and we can take a look at the monthly chart. So we can see that the 21 EMA is at 47K right now. Why is that important? Because the 21 EMA on the monthly chart is basically one of the biggest moving averages you need to be looking at as a investor or analyst in the cryptocurrency market, right? This is an important EMA. That's an understatement, all right? And how do we know that? Well, the only way we can really look at it is that every time we've lost it, we've seen a 50% correction within a matter of months, and every time we've gone above it, so we've regained it, we've seen upwards of a 200% rally into the thousands of percent rallies within the next year or so. So you can see we lost it here in 2014. We saw a 50 to 60% correction within about 3 months there. We lost it in 2018. Within 2 months or 3 months, we saw a 50 to 60% correction. And then we lost it in the COVID drop, although it was brief, and we saw a very, very sharp correction of 45%, or roughly 45%. Okay, so those are all reactions from losing the 21 EMA on the monthly chart. Those are pretty severe reactions, and so that kind of begs the question, well, what's going to happen with the 21 EMA now on the monthly chart? And what we could say is that, well, if we lose 37K on the monthly chart here with 21 EMA, we can pretty much assume that it's going to end up, something similar to what we saw in 2018, 2014, or the COVID drop, in which we see a very, very sharp correction very, very quickly. This is kind of why I've been talking a bit about a May crash. Now, what I will say about a May crash is that if Bitcoin manages to break that descending wedge to the upside and break above 42.5K, that entire scenario is kind of a little bit less likely to play out. Now, as of this point, nothing's happened on the Bitcoin chart, so it still is my prediction. I still think there's going to be a major correction in May, but there is an invalidation point for everything, and obviously if Bitcoin breaks back into the mid 40K region, it doesn't seem as likely. But at this point, all the evidence I've displayed before in a May crash is still very relevant and still holding true. Now, as for breaking the 21 EMA to the upside, you can see that we broke it to the upside here in 2015. We saw a massive bull market, broke it here to the upside after the COVID drop, saw a massive bull market again. And you can see this thing, all you need to do is look at the chart. It holds for support quite well. And so there is an argument to be made that, hey, maybe the 21 EMA could hold Bitcoin for support here and we could see a rally off of it. Now, do I think that's likely? Not at all. I mean, especially considering things like the 4-year cycle, which again, you guys are very familiar with at this point. It just really doesn't seem likely that Bitcoin's just going to randomly go macro bullish here and depeg from traditional markets. Now, if it does do that, that is something that I would consider to be unpredictable. Why? Because Bitcoin at the current moment in time is pegged to traditional markets. If it was randomly to go macro bullish right now and go to new all-time high, that is, I don't know how to say the word, but anomaly, all right? Whatever that word is, you guys know what I mean. It's an event that it can't be predicted. It's never happened before because, we can assume, based on the interest rate hikes and based on the recession that is almost guaranteed at this point, that the traditional markets will be going down and the dollar will be going up, right? In the current trend, Bitcoin should go down in that macro scenario. Now, if it goes up, that's Bitcoin breaking the trend. And as an investor, we need to be investing with the trend. So if Bitcoin breaks the trend, that's out of our control. That's just part of the game. So the way I see it right now is that the bearish argument, and this is my opinion, obviously some people are going to disagree with me, that's fine. The bearish argument is the logical place to be, purely because you are investing with the trend, if you are relying on the bearish argument, right? If you're in the bullish argument, you're trying to say basically that Bitcoin is going to do something it's never done before. All right, and I don't stand well with that. I don't think that's a logical thing to say. Again, people will disagree with me, but that's how I see the market right now. If you're bearish, you're investing with the trend, which is what an investor is meant to do, right? You're not meant to try and catch these massive reversal points based on evidence that hasn't played out before. You're meant to identify past trends and apply that to the future. That is the whole point of investing, right? And people say all the time, well, past trends aren't a good indicator of future performance. And it's like, you're correct, but what do you think technical analysis is? It's using past data, data that is harvested from the past, adjusting it, and predicting the future based off that data. That's the whole of TA. So if you don't believe in investing with the trend, in a way, I would argue you don't believe in TA. And if you don't believe in TA, I don't know what to say to you because it works. But yeah, so that's the bearish argument there. And then I suppose I see most of you guys who are watching the live stream right now are part of a channel. And yeah, obviously I think that Bitcoin will go down to the 200-week SMA, and I think that's going to happen in November to December. This is all old information though. And then I suppose the information that is pressing, that is of concern now that we've had that interest rate hike, is kind of the death cross on the 3-day chart. Right, that's a very interesting piece of information there. And it's probably the most compelling piece of information that we can come across. So 3-day chart, we have the 50 and 200 SMAs. Generally, when we see the 50 SMA cross underneath the 200 SMA, that is called a death cross, and we see a major correction on Bitcoin. And that will be happening in just about 6 days or maybe 9 days or maybe 12 days, right? The point is, within the next 2 weeks, there will be a death cross on the 3-day chart. And as I've just said, the last 2 times that's occurred, we've seen major corrections on Bitcoin. Right, going back to the weekly chart. In fact, let me just reverse this all here, and we can get back up. Okay, so going back to the weekly chart, let's switch it to the weekly time frame. We can see something like the Gaussian channel, and the weekly candle was closing in 3 days, by the way, so this is really starting to get interesting. The Gaussian channel flipping red is something that's only happened 2 times in Bitcoin's history, both times preceding a major 50% correction. It will be flipping red in about 1 to 2 weeks. And then on top of this, we have evidence coming from the Bollinger Bands, in which the Bollinger Bands are having a squeeze, so they're tightening, and that means that a big move's on the way, either up or down. And based on the evidence we just looked at, we can assume that's going to be downwards, and hence Bitcoin is more likely to go downwards based on the Bollinger Bands as well. Moving on to the 75 and the 200, every time at 50 crosses under the 75, which is the red crossing under the blue, we end up in the midst of a major 50% correction, and that will be happening in about a week as well. So you can see all of this stuff lines up. I talk about this all a lot. All of this stuff lines up, and it lines up for a reason, because it's not a coincidence, right? This is all kind of moving in together to create one kind of buffered argument. And so the argument, in my opinion, for a major correction in May to June, is very strong. It's not certain though, and it's also not the major part of my bear market prediction. I don't really care, to be honest, at all what happens in May to June. I care whether Bitcoin gets to the 200 week or not. That's what I care about. And some people always ask me, and I do cover it occasionally, but they do ask me a lot, what would it take for me to flip back bullish? Very simple. All I would need to flip back bullish, in my opinion, first of all, I'd want some more clarity on the macro situation. I'd want some more clarity on what's going on with a recession, because I genuinely don't believe that Bitcoin will perform well if there is a recession. I would also like to see Bitcoin jump above the 200-day SMA, which is a major kind of medium-term to long-term resistance zone that kind of indicates whether we're in a bull market or a bearish market or a bull trend or a bearish trend. You can see on the last dead cat bounce, we actually came up and rejected off of that. I would also like to see, 47K, I would also like to see Bitcoin jump above the 50-week SMA, which I talk about extensively, and that's at 45K. So basically, if Bitcoin can break above 47K and we can get some more clarity on the macro situation, I will happily go bullish again. At this point, I don't see the point. And this isn't something I've been saying for 2 days. I've been bearish since this region up here in the 60K region. So, it's not a new prediction. And honestly, I think at this point, I'm at the point where I genuinely don't really care that much. I'm just looking at the data objectively. I don't have, obviously I have a long-term Bitcoin position and I trade it daily or almost daily, probably sub-daily to be honest. A scalp trading, taking little, positions that last a few hours at a time. But I don't have any long-term skin in the game. And so for that reason, I'm able to not be, manipulated by my own bias. And given the fact that I've de-risked like 63K, I deleted all my long-term positions by that point. So by 63K, I was out of the market completely long-term. If I buy back at 47K or 50K, I don't care. I've still avoided a massive drop, and I've still avoided the emotional stress that comes with 4 months of holding in a red position. So I don't care what happens, but I do think, personally, if I had to choose, I think the bearish argument's more likely here. And I think a lot of analysts will agree with that at this point.